and the session ahead. Julia, at the moment it looks like we've got a pretty nice lead in from European markets.
Katie, it looks like it is going to be a good end to the week. We did see European markets absolutely jumping overnight, so that bodes well for the Aussie market. We are expecting to see relatively light volumes though, and that's because the US was closed last night for the 4th of July holiday. All in all, though, it's been an extremely volatile week, and yet despite the volatility, the market's only down by 0.2%, and with the performance today, we are expecting to finish in the black. If we just have a look at the volatility for the Australian share market over the past few months, this is what it looks like. And this is a VIX index over the ASX 200 index over the last 3 months, and you can see that the volatility has been steadily rising into new ranges, and in July to date so far, the month to date so far, we've seen an average VIX reading of 19.8, so rather quite elevated for the Aussie market. Yet despite this, it does look like we are going to finish in the black. It was the defensive areas which were sold off heavily this week, the telecom, the staples, the financial sectors, these all made losses. On the flip side, you know, it was a good week for energy. We saw oil prices soaring to the highest level in 14 months, and we also saw consumer discretionary stocks doing well, and there were some huge individual performances as well. I mean, this week I think one of the big stories was Boart Longyear coming out with another profit downgrade, and that stock was actually down a massive 26% for the week. Not only that, we saw the other mining services companies being sold down in sympathy. We saw Emeco, which was down by 14%, and Monadelphous also losing 8%. So they were the top 3 worst performers in the ASX 200 this week so far. On the flip side, Billabong had an absolutely stellar week. This stock is up 50% in the week to date so far, so just in the last 4 trading sessions. A lot of that has to do with speculation that now the hedge funds are involved, that they're going to be able to save the balance sheet of Billabong. And of course the gold miners bouncing back strongly this week as well. We saw Perseus up by 44%. We also saw Alasa up by 28%. So all in all, a lot of volatility, but it does look like we're going to end the week in the black given that very strong lead coming out of European and UK markets overnight. The US futures looking good, but of course all eyes to that US non-farm payroll number tonight.
What about the company news, Julia? Because Arian, we got some bad news out after the close yesterday. What's likely to happen when it opens up today?
It's been a tough time for Arium, and if we have a look at Arium, this was firstly divested from BHP Billiton back in 2000, and then we saw the merger with Morgan Steel, and of course since then we've seen the company battling the high Australian dollar as well as high iron ore prices over the last few years. Now they've made this transition into iron ore, what we've seen is iron ore prices actually coming down, and the traditional steel business is still struggling. So if we have a look at this announcement, $480 million worth of write-downs or impairments. Now, $360 million of it is probably related to goodwill from asset sales, because as you move assets, you need to revalue the goodwill, and unfortunately that's been a downward revision. And the rest of it is related to the restructure of its recycling business. So all in all, not good news for Arium. It's still a pretty tough time for the business. Unfortunately, the market does not like announcements like this, and it does follow on from a first half loss. So it does look like we are looking at a full year loss for Arium, and I think the stock will be sold down.
Okay, Julia, I also want to ask you about Crown and Echo. Good news for Crown, not so much for Echo, but we did see Echo trading for a little while after that announcement came out. So what's it likely to look like at the open?
Sure. So if we have a look at Echo Entertainment, I think generally it's a negative for Echo Entertainment post 2019, and that's still a while away. That's 7 years away. So if we have a look at Echo Entertainment, it does mean it faces competition mainly in 2 areas, and that's the private gaming part as well as a high rollers business from 2020 onwards. So for Echo Entertainment, I guess the negative is that in 7 years' time that they're going to face more competition. The good news is that they're probably not going to see this massive capital outlay. So there's going to be no capital raising, no strain on its balance sheet. So that's a positive for Echo shareholders. But I think generally the market has taken it as a negative that it will be losing exclusivity in Sydney post 2019. For Crown, I guess it's a positive, but it is at the expense and at the cost of $1.5 billion. So the key is really going to be for Crown to be able to see a return on its investment, and it probably isn't going to be an easy thing to do. However, Crown has been building up a store of premium assets, whether it's in Macau, Melbourne or Perth, and now they're adding Sydney to the list. So all in all, I think the market will take this as a positive, and certainly in the last few months we have seen the market quite negative towards Echo and quite positive to Crown. And I think the expectation was that Echo had a much larger chance of getting to stage 3 because of the infrastructure proposals that were incorporated in its proposal to the state government. But with Crown winning, I think the market's going to price that in today. Good news for Crown, bad news for Echo. That's in the short term. Longer term, I think it's 7 years away. So Echo doesn't have that capital outlay, the massive capital outlay it initially proposed, and that should be a positive. And it's also got 7 years to deal with the threat of competition.
Yeah, a bit of time.